welcome back to my channel. And today I am going to tell you best stocks to buy in the month of June, and also I am going to reveal you the strategy that is to be taken if you buy stocks now. Actually, the best time to come to know when to buy stock is like when Nifty will breach that 200-day simple moving average. So that level is 17,200. So when that level is sustained, then Nifty will be bullish. So okay, right now we're gonna talk about the market strategy, also inflation, interest rates, GDP, rural wages, fiscal deficit, and tax. So let's go ahead. So we can see that in the previous month of May, all this they have given negative returns and mostly metal. And now also we have seen that there is a sharp fall in metal. So we can rightly say that stock market is a place where history repeats time and again. So this indication was given in the month of May that metals are already weak. Only the auto sector has some hope in it, even that is also weak. So why this correction is going on, especially in the metal sector, is because imposition of uh, duty, and also the FPI are leaving out India, means FPI and for example other countries. So FPI is moving out and investing in other countries. So that's why we prefer companies with high pricing power and low debt. So with higher interest rates, there is reducement in purchasing power. We reduce the purchasing power to control inflation. And so how the mechanism works is, this is interest rate, and this is the purchasing power. And let us say this is demand and this is supply. And if most of the citizens are having purchasing power, or they are having a lot of money, they will keep on buying goods, because the price doesn't matter to them. So the solution is whatever extra money that is needed to be transferred to the bank. And how to attract people to deposit in the bank is is by increasing the interest rates. This is what is done. So let us move to the next. So the RBI also has raised its interest rate to 40 bps, 40 base points, and CRR is cash reserve ratio, and RBI is having the repo rate. Repo rate is the rate at which RBI is lending money to private banks. Now the consumer price index and wholesale price index was 7.79% and 15% respectively. So mostly inflation is at the peak, and this is what the government has done is they have given subsidy of 200 rupees on LPG, and they have reduced the excise duty by 8 rupees. So previously petrol was 105, now it is 97. And also addition of fertilizer subsidy, custom duty cut on coal, naphthalene, ferronickel, and polypropylene, and also ban on exports, because we need to focus on our internal consumption. Also, export duty hike was the main reason why FIIs are leaving India. Let's go to the next. And inflation is also at the peak, and that is making our Indian market expensive. On an average 6.4 is the inflation. And also crude price is going high because China is giving unnecessary demand for them, so the crude prices are also increasing. This is affecting our earnings and evaluation also. Let's move to the next. And the main reason why FPI is moving out is our market is expensive with a P of 19.7, and for FY 2022 estimate, and for FY 23 that is 17.5. So we can expect that FII will move in next year. And by moving out from India, they are going to these countries like Indonesia, Philippines, Korea, and Taiwan. So they are finding opportunities over there. So now FPIs have moved out, and DIIs are coming in. DII is domestic institutional investors, and now the State Bank FD is 5.1%. So government is also lowering people into getting retail participation. Everybody wants less risk and high returns. So let us talk about GDP. GDP has been slowed down, that is 4.1%, due to lockdown in January that had happened. There were rising cases in January, and it will stay in this group only, 6.8 to 7.7. Let's go to the next. And rainfall is very crucial for this month, and especially for the monsoon related companies, and it is expected early in Kerala, 3 days Kerala, and rural wages have been very weak. And also uh, as per some FMCG companies, they are saying that farm incomes have improved because there is rural inflation. They can raise their price and sell their products, so they are taking benefit of the inflation. Let's go to the next. Now the key risk that is involved in investing now is, first is crude prices, second one is RBI can change their rates accordingly, and fiscal deficit can also change because we can borrow more and more, and you won't have the capacity to repay. Even if Fed is American Reserve Bank, we can say like that, they are also going to reduce or increase according to their situation. In USA also there is a situation of high inflation that is also very peaking, and interest rates are also an alternative because they are giving 5.1% returns. There is food inflation going on in Sri Lanka. There is food crisis also. People are unable to buy groceries and kind of general products which we need for everyday consumption, and this is the companies that we must invest in as per the current situation. Logistic, paper, this is plywood, paper, and construction, medical, and these are the sectors that we must focus on. And there is a risk of 10%, and we can make a returns are 30%. So I will show you the calculation. Let me put the ink off. Okay, if you invest 10 lakhs, you need 10s, 100,000, 10,000 lakh. Like there is we need 10s, 100,000, 10,000 lakh. So there is a risk of losing how much? 1 lakh. So I have a trick to save that 1 lakh. You just need to pay the premium of somewhere around 47,000, and that 47,000 also can be reduced to 22,000. So I have a trick wherein you can just pay 22,000 and save 1 lakh. Okay, so I will teach you this skill. Just a minute. Chrome, and let's put the internet on. Net is on. New tab, Nifty option chain. Go to Nifty option change, and this is how it's like our holding is for 12 months, and mostly now that LTP price is also not available because of the VIX is high and all. The this is available for the end of December 2022 expiry. Put you can buy at the money. So I would like to show you is that if you buy a put for example June, then for June is also not available. 30th March 2023, that is very expensive, somewhere around 53,000. I'll show you. So this is costing somewhere around 57,000. It will cost. I'll show you. Somewhere around 1,150, multiplied by 15, somewhere around 57,000 it is costing. So if you buy somewhere close to December, end of December at the money, 948, see, it's costing only 948 into 50, 948 into 50, so it is costing around 47,400. This 47,400 you don't have to pay from your pocket. Just assume, for example, you are a professional investor and you invest somewhere around 10 lakh. This full portfolio you can pledge. This full thing you can pledge, and you can pledge and you can get the margin, and this totally becomes free for me. But this also can be recovered. I'll show you the trick what to do. So you are ready to pay 47,400, okay, to save your capital. Now what you can do is you have to sell. Just a minute, I will take monthly expiry 14 July 2022. We will take 14 July 2022. Explain. You have to sell Nifty call options. Nifty call options selling. You have to sell Nifty call options. That is the strike price. The strike price should be 5% higher than the spot price. Now Nifty is somewhere around, I'll show you where is Nifty. Let me put the ink off. Somewhere around 15,559. 15,559 multiplied by 5%, it is 77, okay, plus 15,559. So the spot price we are getting is 16,336. So we have to find in this chart 16,333. 16,333. So in what happens in option selling is that in option selling you receive premium. The price is 65, that is 65 into 50, because per lot per lot of Nifty is 50. So your rental income that you get every month will be like 59 or 69, it was not 69 into 50, that is 3450. Now today we are in June, so June, July, August, September, October, November, December, like 1 2 3 4 5 6 7. So 3450 into 7 is equal to 24,150. So like 24,150 minus 47,000. So you just have to spend 22,850 in case you are a very big investor, like you are investing 10 lakh. If you are investing say suppose 20, then you have to sell two lots, somewhere like that, to sell two lots, and you have to buy one put to save your money or to save your portfolio. That's the case. So this is all I had to say. Thanks for watching my video, and stay tuned for the next video.